It was a record-setting day on Wall Street with the S&P 500 finishing at 4141, which was up 0.33% and good for yet another all-time record closing and intraday high. That was particularly impressive considering the news story that dominated financial markets first thing in the morning, which was that the Johnson & Johnson vaccine had to be halted as a result of some one-off situations where they were running into some problems. And so markets handled that news quite well and fought back like a champ. We saw many other areas of the market continued higher as well. We saw oil and gold do reasonably well. We saw Bitcoin do pretty well right in front of Coinbase's IPO tomorrow. So we'll talk about all that, see what it means for our posture. Then we'll get into our trade application example, where I wanted to focus on a media name that was breaking out here today and show you how to sell a put on that to take advantage of its bullishness. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 13th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area and sign up for our email distribution list, and that way you can be notified whenever we post these videos. You'll also be notified of any stocks within the S&P 500 that are giving you overbought or oversold cluster signals. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZ. We really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's jump into today's activity. And as you can see, I've got chart 4B pulled up here in front of us, which will show us a 4 grid of the 4 major U.S. equity indices. Now, those of you that follow me on Twitter and on our premium Telegram channel, you might be aware of this already, but sometimes people miss those announcements. So I'll also let you know here. I did update some of our charts over the weekend for those of you that are premium members of Market Scholars. So notice the new date in this chart 4B that you see up here says April 10th. So this chart, 4C and 4D were all updated for the same reason, which is what I had mentioned last week. The Nasdaq composite on the Thinkorswim platform got a new ticker symbol, so you can no longer use just simply comp, because comp is now associated with a individual common stock. So the new ticker symbol for the Nasdaq composite is comp :GIDS. And the new Think script, if you're importing it correctly, should then show you this NASDAQ comp label here in black. So I updated those 3 charts. I also updated chart 1A, and I updated chart 5A. So 5 chart updates over the weekend for those of you that are trying to stay up to date with any of those changes. Anyway, when we're looking at the 4 grid here, we have the good fortune of being able to use the color coding background to understand what our posture is according to the market forecast technical indicator. Remember, when the background colors of the charts are green, like they are in the case of the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite, that means that we have a bullish intermediate posture. Now, intermediate is not only describing the length of time that we're looking at for developing that posture, but also represents the official name of the green line on that market forecast technical indicator that you see down below each of these charts. So whenever you hear David and I discuss our quote-unquote posture, unless we say otherwise, what we are referencing there is from an intermediate time period perspective, or that green line there. So you'll notice on all 3 of those charts, the green line is in what we term the upper reversal zone. In other words, above 80 on the market forecast technical indicator. And that suggests that not only do we have a bullish posture, we have a strongly bullish posture with those 3 charts. So that means we do have one outlier here, and that outlier is the Russell 2000. I mentioned last week how the Russell 2000 had kind of taken over for the Nasdaq Composite in terms of who is this market's current laggard. For a while there, we did see the Nasdaq suffering, but we've actually seen a really robust rebound here from Nasdaq. A lot of those large cap tech stocks out there, your FANG types of stocks, have done really well here recently. So it's kind of pulled that index out of the doldrums, yet the Russell 2000 small cap index continues to struggle on a relative basis. So this pink background color on the Russell 2000 chart suggests that we have a weekly bearish posture. It's not strongly bearish because of where that green line is. You can see here in the label, the intermediate level currently is at 54.26 and falling. Remember, once it crosses down below 50, we would then see this background color of the chart turn to the darker shade of pink like we saw back here, and our posture would be strongly bearish. At this point, it's just weakly bearish. So it's kind of hanging around near the indicator's midpoint there, where we don't really have a lot of information in one direction or another. If you kind of look at the range of the Russell 2000 over the last 2.5 months, we're basically dead smack in the middle of that range right now. So we don't have a strong trend up or a strong trend down, but the posture just does lead us to believe it's slightly bearish at this moment in time. And the 30-day moving average is kind of giving us the same indication. Notice that the 30-day moving average as of today's move on the Russell 2000, where we saw it down 0.22%, that now is a red moving average. And what that is referencing is the fact that price is now below a falling moving average. So yesterday, price was below the moving average, but the moving average was still rising. So that's why the moving average was colored yellow yesterday. Today, we have enough wear and tear on that chart where the moving average started to fall slightly again. And so that's not a great sign there. We've actually been down a couple days in a row there on the Russell 2000. The Nasdaq was our leader here today. I'd mentioned before it's had a really impressive move off of its lows here since the end of March. March 25th kind of marked an important bottom right there for the Nasdaq Composite, and we've really shot up since those times. We're not quite to new highs yet, so we've got a little bit of work to do there, but they're not all that far away. The high on the Nasdaq Composite was around 14,175. We ended today at 13,996. So, another couple of big moves higher, and we might very well be talking about all-time highs on the Nasdaq Composite as well, just like we talked about the new all-time highs on the S&P 500 today. S&P 500 was up 0.33%. Dow Jones Industrial Average was down 0.2%. So that was the second straight down day for the Dow Jones, just like we saw with the Russell 2000. The difference is how the chart has looked up until these last 2 days. And the Dow Jones Industrial Average continues to be in a strong uptrend. It's just taking a little bit of time off, a little bit of a breather the last couple of days, but this remains a fairly strong chart that we're looking at right here with that intermediate line up there in kind of the 97th percentile there. And the difference being with the Russell 2000s at 54, as I mentioned before, considerably different than what we see with the Dow Jones or any of the other charts there. So anyway, in terms of how the charts look from a trending perspective, both the S&P 500 and the Dow Jones Industrial Average look really healthy to me. We've seen a catch-up type of a game played with the Nasdaq Composite, and so that chart doesn't look quite as strong because it hasn't been as consistent. Nonetheless, it is noteworthy that we are right next to a potential breakout zone, whereas the Russell 2000 is just simply not playing along at all with the other three indices. Let's go ahead and take a look now at another chart setup. In this case, let's look at the 3 green arrows chart setup. And this will be chart 4D. This is another one that has a new shareable, importable chart script for those of you that are premium members of Market Scholars. So again, notate the date up here says 4/10/21 in the label up at the top. Anyway, as we're looking at this particular chart setup, a reminder that the background colors will signify something different on chart 4D. And what they signify here is whether we have 3 green arrow signals, 3 red arrow signals, or a mix of green and red arrow signals. If we have a green background, like we do with the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite, which coincidentally were the other were on the other chart were the 3 that had the strongly bullish posture. Not surprising to see that those are the 3 that have the 3 green arrow signals here on this particular chart setup. Russell 2000 cannot make that same claim. We did have a red arrow come into play here yesterday on the Russell 2000 as its price did close below its 30-day moving average. We do still have green arrows on the MACD histogram and the stochastics, however, but those are starting to roll over a little bit here as well. So I wouldn't be surprised to see another red arrow show up, perhaps either on the MACD histogram or maybe even a phantom red arrow here on the stochastics. It could happen as soon as tomorrow if we have a little bit of a sell-off there. So again, just another recognition that the Russell 2000 is kind of the odd man out right now. If you're looking to take bullish trades in the market, that is not the place that is gathering up the most relative strength right now, and you're probably better served focusing on some of those other charts that we're looking at here. Let's go ahead and take a look at our longer term view here. This will be chart 4C, and this is the 1040 crossover method. This is another one that we have new chart scripts for. Again, April 10th, 2021, as you can see in the label up there for those of you that are trying to stay up to date with your charting package. Remember that those of you that are premium members, we offer over 50 customized charts. You're only seeing a fraction of them as to what David and I show you during these presentations. And so those of you that are not premium members, of course, we'd invite you to check out our offerings there. If you find yourself with a little extra cash in your pocket, perhaps you want to take your education to the next level and join us with the premium service, and feel free to go to our website and check out our pricing tab for additional information there. Anyway, as we're looking at chart 4C here, you will find that we are in reasonably good shape from a longer term perspective. Remember that this particular chart setup is looking at 3 years worth of time in each of the 4 charts. Each one of the candles you see on those 4 charts represents 1 week in time. So the other charts we've looked at thus far have been 3 months in length, and each one of the candles is 1 day. So this one kind of allows us to expand our horizons a lot further and kind of get a general sense as to what the longer term trends look like. And as most of you are aware, stocks do tend to go up over the long term, so we shouldn't be entirely surprised to see that right now we remain in reasonably good shape with the 1040 crossover method. Most of you are aware of what that is, but just because we do get new folks that are checking us out on YouTube all the time, be aware that these charts that you see in front of you here will have a orange line and a blue line on it. The orange line will be a 10-week moving average. The blue line will be a 40-week moving average. And we're looking for the crossovers of those moving averages to kind of help dictate where do we want to have exposure for our longer term money. And so you can see with all 4 of these charts, of course, we've had a bullish posture for a very long time. In the case of the Nasdaq Composite, it was actually the first week of May of last year. So we're almost at our 1-year anniversary of fully bullish posture that we've had along the way on the Nasdaq Composite. The other thing that I would mention here is that there was something positive that has developed since last week when we looked at this chart together, and that is on the Nasdaq Composite itself. Remember last week we were looking at the Nasdaq Composite's PPO line kind of rolling over here, somewhat similar to what we see currently with the Russell 2000. And remember that PPO is effectively measuring what is the distance between the 10-week moving average and the 40-week moving average. And when those lines are pinching together, the PPO line is kind of rolling over to signify that. And so you can see in recent weeks, we had this rolling over effect on the Nasdaq Composite. Well, lo and behold, the strength that we've seen out of the Nasdaq the last 2 or 3 weeks has been strong enough to actually start curling that line back higher. I know it's hard to see there, but you'll have to take my word for it. It is curling up just slightly. Keep in mind it's only Tuesday, and so if we do have a sell-off for the rest of the week, that could change. This candle that we're looking at right now does not get set in stone until this Friday's close. But as of right now, it's early in the week, but it looks quite promising that that downtrending PPO may actually start reverting back to the upside. It's basically an acknowledgement that the more recent trading of the Nasdaq has overwhelmed the further back trading of the Nasdaq. And so the more sensitive orange line that represents the 10-week moving average is starting to curl higher once again and go away from the kind of more longer term 40-period moving average, that's usually considered a bullish attribute. And so we had already seen that type of behavior out of the S&P 500 and Dow Jones Industrial Average in recent weeks. So it's good to see the Nasdaq Composite now kind of joining suit. We got a long ways to go on the Russell 2000, however. That one continues to roll over. But, having 3 out of these 4 charts showing us that strength, I think, is a positive sign. Let's go ahead and pop on over here to the internet briefly. I always like to get an opportunity to say thank you to those of you that help support this Market Outlook video. Remember, we don't monetize these videos. We don't make you watch advertising or do anything like that. So we try to take a couple of hours out of our day to produce the videos. If you guys feel like that is worth our time, the way that you can let us know that is by simply clicking like for us there on Twitter. Only takes you 5 seconds, and there's 4 different ways to go about that. You could do it right here on our website while you're watching the video up above. There's this kind of Twitter widget where you can actually just click that heart right there. Others of you might find that if you're on Twitter quite a bit as is, you'll find that our most recent Market Outlook videos are pinned to the top of our timeline. You'll also find a link to the particular tweet in question within the description area of the YouTube video for those of you that watch these videos directly on your YouTube apps. And then we also have a link to the specific tweet within the email that we send you out as notifications. So 4 different ways to make it easy for you to help kind of spread the word about our fledgling business here. And thank you to all 107 of you that were willing to do that last time around. Over here on the right hand side, I would also mention, it looks like a number of you are probably taking advantage of those 5 new updated charts that I had mentioned before, because the Thinkorswim chart links and setup tutorial is listed here currently in our popular recent blogs area. Remember, that is exclusive to premium members of Market Scholars. The other place you would find that, if it doesn't happen to be in the popular recent posts at that particular time, is, remember, when you come up to the top, hover your mouse over Tools, and then just go to Premium Resources, and you'll find all of those various tutorials that we offer you there. Also, talked about some of the dividend increases here late last week, so make sure you're taking advantage of that. That's one of the things we do offer for free, no matter what your subscription level is, so feel free to check that out if that's of interest to you. In fact, I just got done tweeting quite a bit about Procter Gamble here this afternoon. Procter Gamble came out with a gigantic 10% dividend increase after hours here tonight. For some companies, 10% is not gigantic. For Procter Gamble, it is. It's a company that's raised its dividends for more than 60 years in a row. You'd have to go all the way back to 2009 since the last time we saw them raise their dividends by 10% or more. So quite a monumental increase there for Procter Gamble. And I would anticipate that Johnson & Johnson will likely come out with a dividend increase here very quickly as well, if recent history is suggested. In other words, last year Procter & Gamble and Johnson & Johnson announced their dividend increases on the same date, so we might very well hear from Johnson & Johnson here later this week on that. Now, then again, with the news we heard about Johnson & Johnson and the vaccination, perhaps they want to kind of stay out of the press. Maybe they'll choose to make their announcement at a later date, but otherwise, if they're going to kind of stay on track with what they've done historically, expect to hear from Johnson & Johnson here very quick on that as well. And if you're interested in dividend growth investing, make sure you're following me on Twitter, because I'm always sharing this type of information there, whatever I find interesting. Also, earlier today, we had a fantastic class for dividend growth investing that I taught this morning, where we reviewed the utilities sector. We also reviewed a trade that I did 13 months ago where I've tripled my money on it, and talked about my psychology of getting into the trade at the time and some of the mindset that you need to have in order to continue to hold a trade like that throughout thick and thin. And so if you're interested in hearing me share my story of that very interesting investment, make sure you're checking out my recording of my dividend growth investing class from earlier today. For those of you that are Plus or Premium members, you can access that as always in our Trading Rooms tab right here. If you just click on Trading Rooms, it'll take you to our calendar. Also, while we're over here, let's talk about the Sector Selector. Remember, I put this together on the weekends, and so this is a few days old at this point, but will still give us a little bit of guidance here. Main thing I wanted to point out was that we had some improvement from my perspective on the Sector Selector, because it shows the willingness of market participants to take on risk. We saw consumer discretionary, we saw communications, and we saw technology all advance in the rankings there. And we do have a lot of secular growers within all three of those categories there. So nice to see them kind of get back on track there to a degree. And again, that is part of the story of what's driving the Nasdaq Composite right now. Remember that stocks like Tesla and Amazon are part of the consumer discretionary area, and of course a big part of the Nasdaq. Stocks like Facebook and Alphabet are doing quite well right now, and they're part of not only the communication sector, but also a big chunk of the Nasdaq. And then stocks like Apple and Microsoft, not only a big chunk of the Nasdaq, but also hugely important to the technology sector. So all of those types of stocks have all of a sudden started to come to life once again. And I generally perceive that as a bullish sign when it comes to thinking about the risk on temperature of the stock market. And right now, it does seem like market participants are willing to take on risk. And we'll find out in a big way tomorrow how successful the Coinbase IPO might very well be, with all the enthusiasm around Bitcoin and other cryptocurrencies here these days. One other thing I wanted to quickly point out is we use WebEx for our premium classes at Market Scholars, and starting last Thursday, WebEx pushed through some sort of a software update that has added a level of inconvenience for some of you. Fortunately, not for most of you. And the breakdown appears to be whether you use a Windows-based PC or whether you use an Apple/Mac computer. If you are a Mac user, the Join Now button has been grayed out, as you can see here. One of my clients sent this to me, and he said that this button is no longer available and you can't get in, but there's this other area directly below there that says Join by Browser. And so that is a hyperlinked area when you're logging into our various premium classes. If you are a Mac user, we would encourage you to try that button right there. Again, most of you are Windows-based PC users, so you're not going to notice any difference whatsoever. But if you happen to be a Mac user, make sure you're recognizing that little tip. I did send that out via Telegram earlier, but I know, again, not all of you get my messages or what have you. So since I've got your attention on this particular platform, just trying to get the word out about that. So if you're a Mac user, the next time you try to join a live class, make sure you're using the Join by Browser function that you see right here when you're signing into the class. All right, let's go ahead and get back on track with some additional charts from Thinkorswim. Let's pop on over here to chart 5A. Now again, 5A was another one that we did a chart update on. This wasn't a big deal, and one that you're not going to find to be overly obvious. I just added a couple more cryptocurrencies behind the scenes in the script itself, so that way their labels would show up if we pulled them up on charts. So let me give you an example. I'm going to replace TNX down here with ELX instead, which is a chart where you can see what the price of Ethereum is, and you can see here now that there's a label for Ethereum. I also put in ETHE, which is the Ethereum fund. I also put in GBTC, which is the Bitcoin fund. So anyway, not a big deal for most of you, but in case you wanted that update, just be aware this has been updated now with the new date in chart 5A of April 10th, 2021. So as we're looking at this, I did want to kind of point out Bitcoin, and I didn't actually see what Ethereum did here today. It was up nicely. So Ethereum was up 5% here today. Take a look at that candle right there. Bitcoin was up 4%. Both of them hitting all-time highs on the eve of one of the most major events that this fledgling cryptocurrency universe has seen in the financial markets, which is the Coinbase IPO, which is expected to have a market cap of around $100 billion, if you can imagine, just created out of basically thin air. So it's going to be really interesting to see if that goes off without a hitch tomorrow. We see a lot of enthusiasm around this particular area, and those that have been keen to taking risk in those areas have usually been rewarded quite nicely. Whether Coinbase represents another way to take advantage of the cryptocurrencies or not remains to be seen. But what I can tell you is that some of those other areas where you've been able to buy Bitcoin in the past, like Square, has done quite well. Notice Square has been going straight up in the last couple of weeks, almost hit a new high here as a result. We're up at 273 on Square. It was up over 3% today. And then PayPal, also you can buy cryptocurrencies at PayPal, and you can see somewhat similar chart where things were not looking so hot for PayPal for a while, and then the last couple of weeks we've just been ripping higher here on PayPal. It was up 2.5% today and closed at 275. So things are looking quite strong within the cryptocurrency space. And tomorrow's big news story in the financial world will be what happens with Coinbase. And by the way, that ticker symbol is going to be a nice and easy one for you to remember, simply coin. It's not pulling up now because it's not listed quite yet. But as of tomorrow afternoon, you should be able to pull up coin on your platform. So great to see that enthusiasm going into that IPO, whether it ends up being a buy the rumor, sell the news type of event. That's always a possibility there as well. But what we do know is that there is a lot of positive price momentum in crypto-related assets as we head into that very, very important IPO tomorrow. Other areas of interest, U.S. dollar has been capturing my interest here recently. You can see that the U.S. dollar was down about 0.36% today. And so that was a pretty healthy decline for an asset class as large as the U.S. dollar. And you can see what that candle looks like down below. It was an important one because for the last 3 days or so prior to today, it looked like the U.S. dollar wanted to find some support at that rising 30-day moving average. And we had talked about that last week, how important that would have been. And so for the last 3 days, it looked like it wanted to hold that support. That changed today. It now looks like the U.S. dollar is breaking through that support level and trying to, test some further lows before establishing support. And so with the U.S. dollar being weak, that generally is a positive sign for things like commodities and foreign securities. And you can see here that gold was up 0.71% today and oil was up 1.22% today. Both of them now have bullish postures at a time when the U.S. dollar has a bearish posture. So that tends to make sense. Gold has been an interesting case because of what I mentioned last week. We have this kind of nice setup here where we had this double bottom on GLD that has been protected, and now we've spent a lot of time above that moving average, and notice a change that's taken place here on the gold chart in the last couple of days. We now have not only a green background color telling us that we have a strongly bullish posture, but we also have a green moving average telling us that price is now above a rising moving average. So this move in the last couple of weeks higher has allowed the moving average to now start tilting just a touch higher. Oil has been a little bit more touch and go here recently, but we've had some positive movements back towards that moving average the last couple of days. The problem is we remain trading below the moving average. So, this is an interesting looking basing formation that's taking place here on oil. The issue is whether we actually get through the moving average or not. And that could be determined here within the next couple of days. So this falling U.S. dollar has led to strength in commodities. It's also led to strength on a comparative basis here, at least today, in the foreign securities. So you can see EFA was up 0.58% today. EEM, which represents the emerging foreign stocks, was up 0.41% today. Both of those bettered the S&P 500, which was up 0.3% today. Now, of these three charts, despite EEM outperforming the S&P 500 today, you can see that the chart still looks quite awful, in a comparative basis. Here you do have a strongly bearish intermediate posture despite the outperformance today, and the security is trading below its falling moving average. So if you're looking for strength out there, I think it makes sense to stick with the U.S. markets or with the developed foreign markets. So think about things like Japan, Australia, Europe, and areas like that. So, those are some of the areas that have had some excellent price strength here more recently. Let's go ahead and take a look at the sectors here and see what's cooking with those sectors on chart 5C. And here you can see we only have one outlier, and it's the same one we talked about on Thursday, which is energy. It's the only one on the 12 grid here where we do have a strongly bearish intermediate posture. Not only that, but XLE is trading below its falling 30-day moving average, with that moving average being red right here. So we got a lot of work to do there with oil and gas companies. Otherwise, the market has been doing pretty well. And you can see some very strong movements out of things like technology. I talked about the impressive move out of the Nasdaq Composite. Well, that wouldn't have been able to be achieved without technology. And you can see just how important technology has been in that move. Technology has just gone straight up. Notice the difference between technology and the Nasdaq Composite. Nasdaq Composite is still below its highs from a couple of months ago. Technology has ran straight through those prior highs and continues to hit new all-time highs as we speak. So a really impressive move there from technology. We also saw discretionary have a very impressive day, up over 1% here in the discretionary world to another all-time high for XLY, and breaking out of some of those prior consolidation zones. We also had a big move out of utilities, and a lot of times you don't tend to think of technology and discretionary and utilities as kind of hanging out together, but we did see that here today. Utilities were up over 1% today, up 1.19%. And again, if you're interested in a conversation about utilities, that's what we spent most of my dividend growth investing class discussing here earlier today if you're looking for additional content. Would also point out that healthcare attempted a breakout here today. So XLV has been a laggard on a relative basis, but we are still trading up near those prior highs of late January. So most of these other sectors have advanced well beyond where they were trading in January. So that's why healthcare does not look particularly good on a relative basis, but it is noteworthy that we are on the cusp of a potential breakout there on healthcare. You also might recognize kind of this formation you see on healthcare here. It's not a perfect candidate, they rarely are, but you get the vibe of a inverted head and shoulders pattern that might very well be establishing itself in healthcare generally speaking, and therefore you might see similar patterns on individual healthcare stocks as well if you're looking for those kind of reversal opportunities out there. In terms of who is the worst performers here today, it was consumer staples. It was down 0.53%. Industrials came in second to last today, down 0.49%. But for the most part, I think the story is these charts still look good. This is a strong market we find ourselves in, and as long as you've got exposure to the stock market in the United States, you likely are finding success, at least with these larger cap, more traditional blue chip types of companies that are out there. Now let's go ahead and talk about our trade application example. I mentioned on the sector selector itself that communications was one of the 3 sectors that had an advancement on that particular tool over the weekend. We can also see here that the communications 12 grid is showing us that we have a strongly bullish posture, and we are near an all-time high on the communication sector. Not quite there, about 4 days off of it, but up in that general vicinity. So that plays a role into our trade application example, which I'll now show you using chart 4A. I'm going to pull up a company that's not a very well-known media company, at least for market participants. If you're driving around in your car or your truck a lot, perhaps you're a little bit more familiar with this company. This is Iheart Media. So some of you have heard of the radio station Iheart Radio and all that kind of stuff. So anyway, it's not that I'm an enthusiast when it comes to traditional radio. I'm more of a podcast guy myself, but you can see where this particular stock caught my attention here today. This was an impressive move for this relatively unheard of type of a stock. It was up 13% out of the blue. You can see it was not only up 13%, but it was up 13% on huge volume. Notice this volume candle down below has this black arrow in it, which signifies that the volume was more than 1.5 times the average volume. And not only that, but this was basically neck and neck with the biggest volume candle on the board, kind of back there with January 27th's candle. This one was rather impressive in that we closed near the high of the session. So notice the volume candle is mostly painted in green down below with just a tiny bit of red because we have just a tiny little wick on the top of today's candle. Whereas this other big volume candle that we got back here on January 27th, it was more of a split between the bulls bulls and the bears that day because we finished basically at the midpoint of that candle's daily range right there. So this one could be viewed as a more bullish candle that we received today. Not only that, but you can see from a technical analysis perspective, it was an important candle. We were able to get up and through this prior resistance area that kind of stretched out over about 3 or 4 candles back here in mid-March. And you can see that this has been a very solid uptrend that has been in place for quite some time now. Notice those green labels up at the top of the chart there. You know, in a 1-month performance, it's up about 20%, 3 months about 50%, 6 months 140%, 9 months 190%, and over the last year it's up 174%. So this is not something that just came out of the blue. This is a stock that has been really rallying significantly for some time now. Perhaps this is a little bit of a reopening play of sorts, as maybe there's an expectation of people back in their cars driving back to work and things like that where they're listening to Iheart Radio. At any rate, it was a strong breakout here today on big volume. You can see that we reversed yesterday's bearish posture that was only there for one single day, and we went immediately back to a bullish posture today with that green line back up in the upper reversal zone. So there's a number of ways you can, of course, try to take advantage of bullish charts. What I chose to do in today's case was to sell a put, which is not the most wildly bullish thing you can do. It is kind of a more moderately bullish thing that you can do. So each person has a different, risk appetite. For myself, I'm feeling like the markets are a little bit elevated and our valuation levels are a little bit rich, so I don't really feel like chasing a whole lot of stocks here. So what I opted to do was to sell the $15 put in the month of May, receiving approximately 1% return on risk for that particular strike. And you can see that this company's $15 level right here would basically start stretching back over the tops of this range of candles back here and also over the tops of this range of candles over here in February. And so that concept of old resistance potentially becoming new support like it did on that day right there on March 4th, that could very well end up protecting our trade if this thing does roll over. Right now, it doesn't look like it wants to. It looks like it wants to break out to the upside, and as long as that inertia keeps on pushing the stock higher, we don't have any fear there. But, we know how quickly things can change in the financial markets, and so having some good technical guidance here to help us with where we've selected our strike does seem to help in this particular case. Remember, if you need trade details, for those of you that are premium members of Market Scholars, I take the screenshots and send out the trade confirmation information and all that via our Telegram app. So that's another advantage those of you that are premium members receive over those that just watch the free video later on at night. So anyway, that's what I had for you. Kind of an interesting breakout trade there for a boring old radio company, Iheart Media. So if you got value out of tonight's video, I would encourage you to click like there for me on Twitter. As far as I know, David should be back tomorrow. He's been on a nice little vacation here, and good for him. I'm glad he's out getting some rest and relaxation, but I'm ready for him to get back into the office and get back into his classes and different things like that. So I'll be excited to hear from him tomorrow. He should be teaching his premium class for advanced options strategies at Market Scholars, and then tomorrow night he should be back on with you guys here on the Market Outlook video as well. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.